Hi students, I am Mahalakshmi, working as Assistant Professor of Commerce Computer Applications in V.V. Vanni Perumal College for Women, Virudhunagar. In this video, we are going to discuss bank reconciliation statement. Usually, you are feel some difficulties while calculating BRS. So, I am taking this topic in a simplified way. First, we are going to see what is bank reconciliation statement. It is a list in which are indicated the various items that cause a difference between the bank balances as per cash book and passbook on any given date. So, it bridges the gap between the balance shown by the cash book and the passbook. There are two causes of difference between the passbook balance and then cash book balance. Transaction entered in cash book but not in passbook as on the date of bank reconciliation statement, or transactions entered in passbook but not in cash book as on the date of bank reconciliation statement. So now we are going to see the first cause, transaction entered in passbook but not in cash book. Some of the reasons, some items are entered in passbook but not entered in our cash book. So the first one is cash or check is directly deposited in bank by debtors or others. Then bank has credited dividend and interest. Third one, bank has debited the passbook for direct payments. Then the bank debit the passbook for interest on overdraft or bank loan, and check or bill discounted previously are dishonored. Then some of the transactions are entered in cash book but not in passbook. Check issued but not presented to bank. Check or bill deposited into bank but not collected. Check deposited but returned dishonored by bank. Dividend interest deposited in cash book but not credited in passbook. So these are all some causes. We are not entered some of the entries in passbook and not in cash book. So we are having two pro forma of calculating bank reconciliation statement. If we take cash book balance or overdraft as per passbook as the starting point, or if we take passbook balance or overdraft as per cash book as the starting point. So now I considered the first one is, that is cash book balance or overdraft as per passbook is the direct rule, and then passbook balance or overdraft as per cash book is the opposite rule. Based on this, so we are going to see the direct rule, that is we are taking balance as per cash book or overdraft as per passbook. If the entries passed in either in cash book or passbook that minimize the balance, that is decrease the balance of cash book, so now we can add that item under the direct rule. Then if the cash book balance or increases based on the transactions, now we can less that amount from the cash book balance or overdraft passbook. That is called direct rule. And then second one is opposite or indirect rule. So here we can at the time of decreasing the cash book balance we can add, but in the opposite rule, if any decrease in cash book we have to just less, and then if there is any increase in cash book balance we can add. It is called opposite rule. Then here I can explain some of the items which are in which are come under the transactions. So we can take the passbook balance as per balance as per passbook and then balance as per overdrawn cash book. Here we can take balance as per cash book or overdrawn passbook. So first item, check issued drawn but not presented at that time. Check issued, we can issue the check, so at that time we can make entry in cash book, so cash book balance is decreased. So here we can add while applying the direct rule we can add, but in opposite rule we have to deduct. Then second one is direct deposit made by customer into bank not recorded in cash book. Here the passbook balance only increased, but we never made any entry in cash book, so cash book balance is decreased. So here also we can add. So here we can apply opposite rule, we can deduct. And then third one, dividend or other incomes collected by bank not recorded in cash book. So here also cash book balance decrease, so hence we can add, but in opposite rule we have to deduct. Then fourth one, interest credited by bank but not debited in cash book. So here also one of the income that is credited by bank in our passbook, but we never made any entry in cash book, so the cash book balance is decrease. So here we can add, and in opposite rule we can deduct. Then in case of remaining items, check paid deposited into bank but not credited. So now we collect one check from the customer, we can enter in the cash book, so the cash book balance is increased, so passbook balance is decreased. It is not deposited into bank, so the passbook balance is decreased. So here we can deduct under the direct rule, but we can add in the opposite rule, that is the passbook or overdrawn cash book. And then payment by bank as per standing instruction not entered in cash book. So here also the cash book balance is increased, so we can deduct in direct rule and then we can add in opposite rule. Bank charges debited in passbook but not recorded in cash book. So here also cash book balance increase, so we can deduct, here we can add. Check deposited but dishonored not recorded in cash book. So check deposited, so we can made entry in cash book, so cash book balance increased, so we can decrease, here we can add. Check issued but not recorded in cash book, so the cash book balance increased, so here we can decrease, deduct, so here we can add. Interest on bank deposits recorded in cash book but not credited by bank. So here we can add that bank deposits interest amount, so the cash book balance is increased, so we can deduct that amount, here we can add. Now we are going to see one problem to understand how we can calculate the cash book balance or passbook balance. So here we have an example. The balance overdraft as per passbook is the first. So it is the direct rule, balance as per cash book or overdrawn passbook. The amount is 12,000. So the first item, on 30/12/2020, check had been issued for rupees 7,000, of which check worth rupees 3,000 only had been encashed up to 31/12/2020. So at the time of receiving the check, we can made entry in our cash book 7,000, but bank encashed only rupees 3,000. So the remaining 4,000 is not encashed, but we entered in our cash book rupees 7,000. Right? So the 7,000 is issued, only 3,000 is encashed. So but we entered in cash book 7,000. So the 4,000 remaining is not encashed, so the cash book balance is decreased, so we can add 4,000. And then check amounting to rupees 3,500 had been paid into bank for collection, but of these only 500 had been credited in passbook. So this is our check collection. At the time of collecting check, we can made entry in our cash book 3,500, but only 500 has been credited by bank, so the remaining 3,000 is deduct. Then the bank charges on overdraft has been collected by bank. So this item is not entered in our cash book. So cash book balance is increased. So here we have to deduct. And then last one, the bank balance shows credit for ₹1,000. Among this, 400 paid by debtor and then 600 collected by bank as income from investment. So this amount, this instruction are not known to the customer. So the cash book balance is decreased. So here we have to add this 1,000. So the net add amount is 5,000. So from the we can add this 5,000 from 12,000. We can get 17,000, and then total deductible amount is 3,500. So now we got balance as per overdrawn cash book is amounted to ₹13,500. So this is the direct rule we can apply. In next problem we have to take on as balance as per OD overdrawn and cash book 13,500. So from that we have to find out the overdrawn as per passbook. So we have to apply opposite rule. So overdrawn as per cash book balance is 13,500. So from the previous problem, what are the amount we have to add? Here we can deduct that amount. What are the amount we have to add? We have to deduct, and what are the amount we have to deduct? Here we have to add that amount. So from 13,500 we have to deduct the net amount 5,000. Then we got 8,500. From that we have to add the amount 3,500. Then we got balance as per overdraft passbook is 12,000. So while doing bank reconciliation statement, all you must know the meaning of the transaction given to us. Then only we can understand from that transaction we can find out the cash balance or decrease or increase. So then we have to apply the direct rule or indirect rule and find out the BRS amount. Thank you. Hope all you understand bank reconciliation statement in an easy way applying these two rules. Thank you.